Ever wonder what makes for one of the best single mutual fund investments? Or whether in the changing landscape of financial markets you can get a trusted and balanced view of what really works long-term? Let's delve into the Vanguard Wellington Fund, its history and its fundamental role in the investment world, a creation of none other than John Bogle. And why mutual funds may not be dead even though many say they are. The Vanguard Wellington Fund was conceived with a simple yet powerful idea in mind. The average individual investor needed a one-stop shop for their long-term savings. This fund was the brainchild of the legendary investor John Bogle, the founder of the Vanguard Group, a firm that always acted as a fiduciary, always keeping the best interests of the investor in mind. Vanguard Group was founded with this first fund and became an industry leader distinctly focused on the individual investor, ultra-low costs, and integrity, a timeless foundation led by Bogle. Far from being a mere repository of capital, it was designed to actively work towards the growth of your investment with low costs. At the heart of the Vanguard Wellington Fund, managed by John Bogle himself, is a balanced portfolio. This isn't a rigid structure, but a flexible, dynamic mix of stocks and bonds that has historically mirrored a 60-40 allocation, known for long-term conservative growth and capital appreciation with a bit of income in the form of dividends. This balance isn't just about diversification, it's about creating a robust portfolio that can weather market fluctuations while steadily growing your capital, all with Bogle's commitment to fiduciary responsibility. The Vanguard Wellington Fund offers a one-stop shop for long-term savings, focusing on return of capital, not just return on capital. But how does the Vanguard Wellington Fund fit into the concept of the efficient frontier, you might ask? Or maximizing returns based on the amount of risk taken? Well, the efficient frontier is a cornerstone of modern portfolio theory. Simply put, it's a collection of optimal portfolios that offer the highest expected return for a defined level of risk. Now imagine a graph where the vertical axis represents the expected return and the horizontal axis represents risk. The efficient frontier is the line that forms the upper boundary of the set of feasible portfolios. So, where does the Vanguard Wellington Fund come into play? The fund, with its balanced portfolio of stocks and bonds, is designed to align with the efficient frontier. It aims to offer the highest possible return for a moderate level of risk. This is achieved through diversification, a strategy of investing in a variety of assets to reduce exposure to any single asset. The Wellington Fund provides diversification by investing in a mix of equities and bonds. This blend of growth and income-generating assets can help smooth out the bumps in the investment journey, reducing the overall portfolio volatility. But it doesn't stop there. The fund also provides fixed income through its bond holdings. This fixed income acts as ballast, steadying the ship during turbulent market conditions. This combination of diversification and fixed income is what allows the Vanguard Wellington Fund to align with the efficient frontier. It's designed to provide a high return for a given level of risk. But the beauty of the fund is that it does this while still being accessible and manageable for investors of all levels. So whether you're a beginner dipping your toes into the investment waters or a seasoned investor looking for a core holding, the Vanguard Wellington Fund could be the right choice. It's not just about chasing the highest returns, but about finding the right balance between risk and reward. In the realm of the efficient frontier, the Vanguard Wellington Fund can be a great solution for both beginners and more advanced investors. It's about making smart, balanced, and efficient investment choices, and the Vanguard Wellington Fund is designed to help you do just that. Before we cover what makes the Vanguard Wellington Fund a standout choice for many investors, be sure to like and subscribe and share a comment. And we'll keep providing informative and conversational videos focused on helping you in your investment journey. At the heart of its appeal is the balance it strikes. Striking a balance in investing is much like walking a tightrope. Lean too much on one side and you risk a fall. The Vanguard Wellington Fund, with its 60-40 split between stocks and bonds, achieves this balance beautifully. It's like having an all-weather wardrobe, ready for the sunny days of booming stocks and the rainy days of waning ones. A second key benefit is its low cost. With the Vanguard Wellington Fund, you're not breaking the bank to invest. The fund's expense ratio is impressively low, making it an attractive option for those seeking to minimize costs while maximizing potential returns. But let's not forget about convenience. The Vanguard Wellington Fund is a one-stop shop for your investment needs. It takes the guesswork out of investing, making it an excellent choice for beginners who may not yet have the skill to craft a complete portfolio using ETFs. It's like having a personal shopper who knows exactly what you need and where to find it. Moreover, the fund is a safer choice. The world of investing can be a tumultuous one, where the waves of volatility can capsize even the most confident investors. The Vanguard Wellington Fund serves as a lifeboat in these stormy seas. Its balanced portfolio of stocks and bonds helps to reduce volatility, providing a smoother and more predictable journey towards your financial goals. Lastly, it's about the return of capital, not just the return on capital. The Vanguard Wellington Fund is designed with a long-term view, focusing on preserving your capital while also generating steady returns. It's not about chasing the next big thing, but about ensuring a steady and reliable growth of your investment. To sum it up, the Vanguard Wellington Fund offers balance, low cost, convenience, safety, and a focus on long-term capital preservation and growth. It's a well-rounded, all-in-one solution for investors of all stripes, from the greenest of beginners to the most seasoned of veterans. The Vanguard Wellington Fund provides a low-cost, convenient, and balanced solution for investors of all levels. Scene script. However, the investment landscape is shifting. What does this mean for the Vanguard Wellington Fund? The financial world is like a living organism, always evolving. In recent times, there's been a distinct shift towards stock megacaps and technology stock exchange-traded funds, or ETFs for short. The allure of these investments is undeniable. The so-called Magnificent Seven, giants like Amazon, Apple, and Google, have dominated the stock market, and ETFs like QQQ have provided investors with simple ways to tap into the tech boom. But here's the rub. With the spotlight so intensely focused on these high-performing sectors, it's easy for investors to become overexposed. The allure of potential high returns can overshadow the importance of a balanced, diversified portfolio. Many investors in the pursuit of the next big thing may overlook the steady, long-term stability offered by investments with lower volatility, including fixed income bonds. You see, when it comes to investing, it's not just about hitting home runs, it's about staying in the game. And that's where a balanced approach comes into play. A portfolio that includes a mix of stocks and bonds can provide the kind of stability that helps weather market storms. This is precisely where the Vanguard Wellington Fund shines. The fund, with its blend of stocks and bonds, offers a sort of safety net. It's like having an umbrella on a sunny day. You might not need it right now, but when the storm clouds gather, you'll be glad you have it. And let's not forget the concept of return of capital. It's not just about making money. It's about preserving the money you've already made. This is especially crucial in a shifting investment landscape where trends can change rapidly, and today's hot stock could be tomorrow's cold turkey. So, while it's tempting to chase the latest investment trend, let's remember the timeless wisdom of balance. After all, even in a shifting landscape, some principles remain constant. In this changing landscape, a core holding of Vanguard Wellington can provide stability and balance. In the light of all this, is the Vanguard Wellington Fund still a good choice for today's investors? Let's consider sage wisdom versus recent fads. There has been a lot of chatter recently about the death of the classic 60-40 portfolio. That's 60% stocks and 40% bonds for those new to the jargon. This idea is based on the current financial climate, with interest rates artificially held at rock bottom that made stock valuations soar, only to have the Fed surprise the markets with historical interest rate hikes, sending shockwaves across the markets. And with the possibility of escalating international and political conflicts breaking out unexpectedly, many are questioning whether this once tried and true strategy can still deliver. However, this declaration of demise may be a bit premature. You see, the 60/40th portfolio isn't just about numbers. It's about balance. It's about diversification. It's about reducing risk while still aiming for solid returns. It's a strategy that has stood the test of time, weathering market storms and economic downturns alike. And the Vanguard Wellington Fund embodies this balanced approach. It doesn't just focus on the latest tech giants or chase the hottest trends. Instead, it offers a diversified mix of stocks and bonds, thoughtfully curated by experienced fund managers. Think of it as having a seasoned guide on your investment journey, someone who knows the terrain and can help navigate through both calm and turbulent times. This balanced approach can be particularly beneficial for beginner investors or those who prefer a more hands-off investment style. We live in an age where it's easy to get swept up in the excitement of the latest tech IPO or the promise of sky-high returns from growth stocks. But let's not forget, with greater potential reward comes greater potential risk. It's like balancing on a tightrope. The higher you climb, the harder you can fall. That's where the Vanguard Wellington Fund comes in. It provides a safety net of sorts, a counterbalance to the risks of overexposure to large technology and growth stocks. It offers the potential for growth, yes, but with an added layer of protection to help smooth out the bumps along the way. The Vanguard Wellington Fund, with its balanced approach, remains a suitable choice for many, offering a potential antidote to the risks of overexposure to large technology and growth stocks. So, if you're considering where to invest, should you be looking at the Vanguard Wellington Fund? Let's reflect on what we've covered. The Vanguard Wellington Fund, with its balanced portfolio of stocks and bonds, has historically mirrored the 60-40 allocation, providing a safer, low-cost, all-in-one investment solution. This fund offers diversification across stocks with the added stability of fixed income from bonds, making it less volatile over time. While there's been a wave towards ETFs and mega-cap stocks, the Vanguard Wellington Fund stands tall, providing a simpler yet efficient avenue for beginners and advanced investors alike. Founded on the idea of return of capital, not just return on capital, it's a one-stop shop for long-term savings. In a world where the investment landscape is constantly shifting and where media hype can lead to irrational investment decisions, the Vanguard Wellington Fund offers a reassuringly steady hand. It's always important to be mindful of the risks of investments, but the Vanguard Wellington Fund could be a suitable core holding for many, offering a balanced approach in an often volatile market.